Hey everyone, Austin over at Oxford Retirement again, coming to you with another educational video. This time we're going to be talking about the tax types of different accounts. Okay, so there's three main tax types. We're going to go through those. So this is going to be a three-part video, but I just wanted to talk about it a little bit because a question we get nonstop is should I do pre-tax? Should I do Roth? Okay. And I think if you just understand a little bit more about how it works, you can better visualize what makes more sense in your scenario. Obviously, if you have questions, if you want some help, we're going to help you out with that. So come see us. But just wanted to do a little bit of education on the topic. So we'll go through. You can see on the screen here that we have the three different tax types. This is a very technical Excel spreadsheet that I make to visualize this. But I think it really does a good job helping people visualize kind of the flow through of how it really works. Okay. So we're going to start in the first column here, the pre-tax, the deferred accounts here. So what this is showing is, let's say we have $10,000 worth of income. Okay, we're working and we made $10,000 and we want to put that money aside into an account. Okay, and if we use a pre-tax account, we don't have to pay tax on those dollars. So we can put the whole $10,000 into the account. Fantastic. So now it's in the account, and let's say it's just going to grow by a 6% rate. So we made 6%, fantastic. Okay. Again, this is all hypothetical. It's just so you can visualize how it flows through. If we make 6% on the account, you'll be at $10,600. Okay. So great. Now your account is at $10,600. However, to take the money out, we'll need to pay tax on it. Okay. And in this hypothetical scenario, we're going to pay 25% tax. Now, spoiler alert, there is no 25% tax bracket right now. That's why it's all hypothetical. But let's say you pay 25%. Okay. So now when you take the money out, you pay taxes and you're left with $7,950. That's what you get to take with you. That's what you get to keep, go spend. Okay. On the bottom here, we have a different chart, just a different view on the different types again. You can see I highlighted again in green the pre-tax column. So just going through the three items here, tax deduction. So what that means is, in a pre-tax account, you get a tax deduction for putting money into the account. So that's going to lower your income now so that you can pay the tax at a later date. Phantom income taxes, we're going to talk a little bit more on the third video. But phantom income taxes are interest, dividends, and capital gains on the account. Okay, so when that happens, when any of that happens inside of a pre-tax account, it's a tax-deferred account. So I don't have to pay tax on it if that interest, dividends, or capital gains shows up. Okay, it's deferring all that stuff till later, so we don't have to worry about it today. The third column being tax-free withdrawals. Obviously, we don't get a tax-free withdrawal from a pre-tax account. If we are deferring it to later, we're going to pay it later. When we take the money out, that will now be taxable income to me. And I'll pay whatever tax that I owe on it, 10, 12, 22%, depending on, how much income you have. So that is how pre-tax works. Next up is Roth.